The notification arrives at 9:47 a.m. Eastern Time on a Tuesday. Not a push alert, not a news headline, just a simple message from your banking app. We are currently experiencing technical difficulties. Account access temporarily unavailable. We apologize for the inconvenience. You refresh, same message. You try logging in through the website, same message. You call the customer service line. Every option leads to a recording. Due to unexpected system maintenance, we are unable to process requests at this time. Unexpected system maintenance on a Tuesday morning across Bank of America, Wells Fargo, Chase, Citibank, and US Bank simultaneously. You check Twitter. Thousands of posts in the last 11 minutes. Reddit is exploding. Everyone is seeing the same thing. Not just the big banks, regional banks, credit unions, even the small local institutions that pride themselves on being different. In this simulation, we begin with a coordinated freeze. Not a hack, not a glitch, a directive. The kind of directive that historically appears during capital controls, sovereign debt crises, or imminent systemic collapse. The kind issued quietly, before the public knows why. The Treasury Department will later call it a temporary measure to ensure financial stability. But that statement won't arrive for hours. Right now, in this moment, 240 million Americans are locked out of their money, and most of them don't realize it yet. Because it's a Tuesday morning. People are at work. Kids are at school. The economy is still moving on yesterday's momentum. Gas stations still have fuel. Grocery stores still have food. Paychecks deposited on Friday are still clearing in people's minds, even if they can't see the balance anymore. The first real test comes at lunchtime. Office workers try to buy coffee, sandwiches, salads. Card declined. They try again. Declined. The cashier shrugs. System must be down. You got cash? Most don't. 73% of transactions in the United States are now cashless. The average American carries less than $40 in physical currency. Many carry none. Venmo doesn't work. Zelle doesn't work. Apple Pay tries to pull from a bank account that's frozen on the other end. The transaction just hangs. People start checking their phones and lines. The murmur begins. Is your bank app down? Yeah, mine too. What's going on? By 1 p.m., the term bank freeze is trending nationally. But there's still no official explanation. Cable news is running speculative segments. Cybersecurity experts are being interviewed. Nobody knows. And in that uncertainty, the first behavioral shift begins. People leave work early. Not everyone, but enough. They head to ATMs. In this simulation, we assume the ATMs are also frozen. They display the same message. Temporarily out of service. But even if they weren't, even if they dispensed cash, the average ATM holds between $40,000 and $70,000. In a city block with 4 machines, that's less than 300,000 total. Split among hundreds of people. Gone in minutes. The ones who get there first pull 200, 300, whatever the daily limit allows. The ones who arrive an hour later find empty machines and growing crowds. Gas stations begin to notice the pattern by mid-afternoon. Cards aren't working. The few customers with cash are fine. Everyone else is stranded. Pumps go idle. In a normal system, gas stations operate on thin margins and high throughput. They rely on constant electronic payments. When those stop, they have 2 choices: accept IOUs from strangers or shut down. Most shut down. Grocery stores face the same calculus. By 4 p.m., store managers are on the phone with regional directors, who are on the phone with corporate who have no guidance to give. Some stores begin accepting only cash. Others try to stay open, hoping the system comes back online. The chaos is worst in cities. In suburban and rural areas, where people know each other, some stores extend informal credit. Come back when the banks are working. But this only works in small communities. In cities, anonymity makes trust impossible. By 6 p.m., the Treasury releases a statement. It's vague. Emergency measures have been implemented to protect the integrity of the U.S. financial system in response to acute liquidity pressures. All deposits remain safe. Access will be restored as soon as conditions stabilize. The word liquidity is doing heavy lifting here. Historically, liquidity crises mean someone very large is about to collapse. A bank, a fund, a sovereign entity. The government doesn't freeze the entire system unless the alternative is worse. People begin searching for historical precedents. Cyprus, 2013. Banks closed for 2 weeks. Depositors lost significant portions of savings over 100,000 euros. Greece, 2015. Capital controls. Daily withdrawal limits of 60 euros. Argentina, 2001. The Corralito. Accounts frozen. Riots in the streets. But those were smaller economies. Peripheral crises. This is the United States, the reserve currency. The system everyone else depends on. If the US freezes, there is no fallback. By Tuesday night, the psychological shift is complete. This isn't a glitch. This is a decision. And decisions like this don't get reversed quickly. Wednesday morning arrives with a new reality. People wake up with no access to money. Rent was due yesterday for some. Bills are auto-scheduled. Car payments, insurance, mortgages. None of it processes. Landlords and lenders are just as frozen as tenants and borrowers. Everyone is waiting. But waiting doesn't feed children, doesn't fuel vehicles, doesn't keep businesses open. The supply chain begins to fracture. Truckers can't buy diesel. Fuel cards don't work. Cash-only stations are few and scattered. Trucks that were scheduled to deliver Wednesday stay parked. Warehouses expecting shipments get nothing. Grocery stores expecting restocks get nothing. Shelves that were full on Tuesday morning are noticeably thinner by Wednesday afternoon. Not empty, but the abundance is gone. Bread, milk, eggs, meat. Anything with short shelf life or high turnover. People aren't hoarding yet, not in the panic sense, but everyone is buying more than usual, just in case. Pharmacies face a quiet crisis. Prescriptions are filled, but payments don't process. Insurance claims are frozen in the same system as bank accounts. Pharmacists are forced to make moral decisions. Insulin, heart medication, antibiotics. Do you hand it over and hope for reimbursement later? Or do you follow policy and say no? Most choose compassion. For now. Hospitals are still operational, but the administrative layer is collapsing. Payments for services rendered yesterday, last week, last month, none of it clears. Hospital systems operate on cash flow. They pay suppliers, staff, utilities in real time. When inflows stop, outflows stop. Elective surgeries are quietly postponed. Non-emergency cases are rescheduled. By Wednesday evening, the question on everyone's mind is the same. How long? The Treasury updates its guidance. Partial access will be restored within 72 hours. Limited withdrawals will be permitted to ensure essential needs are met. 72 hours, 3 days. That means Saturday at the earliest. If they're being honest, people start calculating. How much food is in the house? How much fuel in the car? How much cash on hand? The numbers are uncomfortable. Most households operate week to week, paycheck to paycheck, transaction to transaction. The buffer is thin. Neighborhoods begin to organize. Group chats light up. Does anyone have extra bread? Can someone give me a ride to work tomorrow? I'm out of gas. Anyone know a store still taking cards? The ones with cash become crucial. The ones with stockpiles become targets, though violence is still rare. Still unthinkable. This is only day 2. But the tension is rising. Thursday is when the cracks widen. Businesses that stayed open Tuesday and Wednesday are now closing. No revenue. No way to pay employees who can't access their wages anyway. Restaurants shut down. Retail stores lock their doors. Service industries collapse overnight. Uber and Lyft are non-functional. Drivers can't receive payment. Passengers can't send it. Public transportation continues in some cities, but fare collection is a mess. Turnstiles that require card taps stand useless. Some cities waive fares entirely. Others try to enforce cash only. Ridership drops. Not because people don't need to travel, but because many can't pay. Workplaces are half empty. The ones still operating are those where people can walk or bike, but even those are struggling. Offices without cafeterias or vending machines that accept cash are quiet. Employees leave early. Productivity is irrelevant when survival is uncertain. The stock market has been closed since Tuesday. Technical difficulties. In reality, a freeze, because if markets opened, the sell-off would be apocalyptic. Every institutional investor, every fund, every algorithmic trading system would try to exit simultaneously. The circuit breakers would trigger in minutes, so the market stays closed, frozen like everything else. Internationally, the reaction is silent panic. Foreign governments hold trillions in U.S. Treasury bonds. Central banks hold dollar reserves. If the U.S. financial system is frozen, those assets are frozen too. China, Japan, the EU, they're all watching. Some are quietly preparing alternatives. Emergency liquidity swaps, bilateral trade agreements that bypass the dollar, but these take time, and time is what nobody has. By Thursday night, the food situation is critical in cities. Stores that were half empty Wednesday are nearly bare Thursday. Delivery trucks still aren't moving. The ones that do move are being paid in cash, under the table, at inflated rates. Profiteering begins. A gallon of milk that cost $4 on Monday is $8 Thursday, if you can find it. People are eating through pantries, frozen meals, canned goods, pasta, rice, anything that doesn't spoil. The psychological shift from inconvenience to survival is complete. Friday arrives. 72 hours since the freeze began. The Treasury promised partial access. What does that mean? At 6 a.m. Eastern, a new update. Limited withdrawals of $300 per account per week will be permitted starting today. Access will be staggered to prevent system overload. Patience is appreciated. $300 per week for everything. The math is brutal. Rent? Impossible. Mortgage? Deferred. Food? Maybe. Fuel? Maybe. Medicine? You choose. There is no abundance anymore. There is triage. The staggered rollout means not everyone gets access Friday. Some are told to wait until Saturday, others Sunday. The frustration turns to anger. Protests begin in major cities, not violent yet, but loud. Crowds outside bank branches demanding answers. police presence increases. The National Guard is activated in 3 states to assist with logistics. That's the official reason. Grocery stores that receive deliveries Friday are mobbed. Lines stretch for blocks, cash only. $300 doesn't go far when prices have doubled. Store managers impose limits: 1 loaf of bread per family, 2 gallons of milk, 1 package of meat, rationing without calling it rationing. Rural areas fare slightly better. Farms still produce. Farmers markets still operate. Barter begins. Eggs for firewood, vegetables for fuel. The old economy, the one that existed before digitization, resurfaces. But cities have no farms, no farmers markets, no barter networks. Cities are dependent on systems that no longer function. By Friday evening, the psychological damage is done. Even if the banks fully reopen Monday, trust is shattered. People have seen how fragile the system is, how quickly normal becomes chaos. 3 days. That's all it took. Some are already planning differently, withdrawing everything once access returns, keeping cash at home, buying gold, stockpiling food, moving to smaller towns. The social contract, the invisible agreement that the system will work, is broken. Saturday arrives, more people gain access, $300, lines at ATMs snake around buildings. The machines run out of cash within hours, banks replenish them, but slowly. The logistics of moving physical currency at this scale were never designed for mass panic. People who get their $300 immediately spend it. Food, fuel, medicine, it's gone in a day. The ones who can't access yet watch in desperation. The inequality of staggered access creates new hierarchies. The lucky and the unlucky, the early and the late. By Sunday, 1 week since the freeze, the government announces a plan. Full account access will be restored Monday morning. Withdrawal limits will remain in place for 30 days to ensure stability. We thank the public for their cooperation. Cooperation, as if there was a choice. Monday morning, accounts unlock. People log in, balances are still there, mostly. Some report discrepancies, missing transactions, failed transfers. Customer service lines are jammed, explanations are vague. The relief is temporary, because even though accounts are open, the damage is done. Businesses that closed won't reopen. Jobs that were lost won't return. Supply chains that fractured won't heal overnight. The economy has been interrupted. Momentum is gone. And the question nobody wants to ask out loud is this: if it happened once, what stops it from happening again? In this simulation, the freeze ends after 1 week. In reality, historical freezes have lasted weeks, months, even years. Cyprus took 13 days to partially reopen. Greece maintained capital controls for over a year. Argentina's Corralito lasted more than a decade in various forms. The United States has never experienced a freeze of this magnitude, but it has the legal framework: the International Emergency Economic Powers Act, the Trading with the Enemy Act, executive orders that grant the Treasury and the Federal Reserve sweeping authority during crises. The infrastructure exists. The precedent exists. The only question is the trigger. What would cause the U.S. government to freeze all accounts? Historically, freezes occur in response to bank runs, sovereign defaults, or systemic collapse. In this simulation, we assume a liquidity crisis severe enough that allowing withdrawals would cause immediate failure of major institutions. The freeze buys time. Time to arrange bailouts. Time to consolidate losses. Time to decide who survives and who doesn't. But time doesn't refill grocery stores, doesn't restart supply chains, doesn't restore trust. The survivors of this simulation are the ones who prepared without knowing they were preparing. The ones with cash, the ones with food, the ones with community. Not preppers in the bunker sense, but people who maintained optionality, who didn't assume the system would always work. The ones who collapsed first were the most digitized. The ones who hadn't touched cash in years. The ones who relied entirely on apps, cards, and automatic payments. The ones who assumed convenience was permanent. The institutions that benefited were the ones with physical infrastructure. Cash-based businesses, local farms, barter networks. Quietly, behind the scenes, the entities with access to liquidity that bypassed the freeze, large banks, hedge funds, government contractors, the ones who always have a line out when the doors close for everyone else. The final numbers are never fully disclosed. How many businesses failed? How many jobs were lost? How much wealth evaporated? Estimates vary. Official reports downplay. Independent analyses suggest double-digit percentage losses in GDP. But numbers don't capture the real cost. The real cost is the realization, the sudden, undeniable understanding that the money in your account isn't really yours. It's a ledger entry, a promise, and promises can be paused. Most people return to normal, because what else is there to do? Bills still need paying, life still needs living. The system restarts. But it's different now, quieter, more cautious. Everyone remembers the week the money stopped. And in the back of every mind, the same thought lingers. What if it happens again? If you found yourself thinking about your own account while watching this, you're not alone. That's the point. These simulations aren't predictions, they're mirrors. If this made you uncomfortable, maybe that discomfort is worth exploring. There's more where this came from, but only if you choose to keep watching.